second. All right, the floor is all yours, brother.
Okay, sounds good. I'm Isaiah. I've been trading since I think about April or March, so only a few months, like 6 months. So far it's been so good. I did take a pretty heavy loss when I first started. That being said, entered at a time that I think it really tested whether I wanted to keep going with this with that quarter two and quarter one. Didn't have a lot of luck, but nonetheless, I'm here now. And I remember when I first joined, I was watching someone do one of these markups, and I could not imagine doing one, and here I am. So I'm gonna give it my best shot, and yeah, I want to look over GBP and see what I can do with this. So I'm gonna start off with the daily. I'm gonna go from the daily to the 4 hour, and then the 1 hour after. Give me one sec though. Here we go. Okay, perfect. I'm gonna get rid of my alerts as well. Okay. So based on what I've been learning from Zay's calls and Mino's calls, looking at the daily to see what the trend is like. Do a little bit of markup here with that high, this low, another high, another low. And the reason why I chose this specific pair is because I'm noticing that there could be a change because right now it's looking bearish. This was the most recent lower high. But then right here is when things start to change. And then as well as it's starting to reach back to that higher low, but it hasn't fully broke that. So from here, I'm going to go to the 4 hour. And this is kind of where I start to get stuck. So feel free to like pop in, Zay, and like give any advice. But based off of from this box here, it's looking like it's gonna change to bullish. However, when I'm looking at where we should be seeing that next higher high, it hasn't breaking that point. So until this breaks that most recent higher high, I can't trust that it's going to be going in that bullish direction. Anything that I should stop and add into that? Oh, shoot.
Cool. So far, can you hear me?
Yeah, I can hear you.
All right, perfect. So far, what you have looks really good.
Yeah.
Um, my main thing that also like to do is when you mark up your boxes,
Hmm.
try to connect them with trend lines so you can actually see, um, if the trend line has been broken. Because let's say if you were seeing it bearish, right, or
Hmm.
trending down, connect your downward trend line. And if you see like a break of that downward trend line, then you can automatically say, okay, we got a break of trend line, so we could potentially be going bullish now. Or if it's an uptrend and market broke below the trend line, you can look at it and say, hey, we may potentially be going bearish now. And that way you can kind of have your mind set on buys or sales, so you won't get confused.
Right.
Um, so basically from there, if you will, just draw your trend lines on what you have and go from there.
Okay. Okay. Sounds good. Okay. So let me go
Can
back.
I add something?
Yeah. Yeah. Absolutely.
Absolutely.
So what you also want to do is where's your support and resistance?
So I would have
No,
oh, sorry.
no, market.
Yeah, I'm gonna mark it. Yeah, resistance would be so I'm gonna extend this because this would be my next resistance, and this would be the next line of support.
But which way aren't you marking it? I'm testing you.
Say that again.
In order to know what it's doing now, what do we have to do? They
Fib
says it to the best, to the left, to the left, to the left.
to the left. Okay, so I'm assuming that you're probably looking at this like drastic
Right now,
drop
you're
here.
going to the right.
Oh, sorry, here.
We got to know what it's doing at the left because what does they do also that's very important that you want to mark your zones because it could be hitting a resistance zone, not just your trend lines, right?
Right. Okay. Okay, so let me go back and then draw the trend lines first. So,
Keep zooming to the left though.
okay. Oh shit.
Do you see anything common there, right? So this your most recent lower high
Mm,
or higher low, sorry, looks like it could be a resistance zone, right?
I see. Okay, yeah. So this right here, you're saying.
And also, um, if you go up to your higher low there, no, the one down,
Oh, yeah.
no, missed it. The one right in the middle, the most recent one you have marked up that you were dragging.
Higher low.
Not that one, because that's a lower low. You that one right there. If you drag it all the way to the left, keep going. Do you see how it touches it, doesn't break it? And when
Yeah, I
it
see that.
does,
Yeah.
right? So this is why it's very important not to cut corners when marking up charts. Because even if you're
Okay.
to drag your lower low all the way, you can tell that that's a major support zone,
Right. Okay.
right? Because what would you say now that you're looking? There's a good chance it could be consolidating.
Right. Because it's
So
bouncing in between. Yeah. Okay. So then should I be extending this as well too? Because when you're saying consolidating, it makes sense when I extend it and it's in this region now.
no, because you're looking at you want to see where something's hitting it more than two times, so three times or more in a common zone. You know that is a zone that it tests, right?
Okay. Okay. Fair enough. Fair enough. Okay. So
My
then
man Zay taught me this, guys. This is why it's important because I remember marking up charts with him all the time when I first started.
okay.
But I will let Zay take over.
Okay.
I got one question for you. So,
Yep.
this particular trade, right?
Mm.
Um, what exactly what so which direction are you ultimately which direction do you think the market is kind of going in right now? If you had to make a decision, what would be your bias or what do you think the market is going up or down?
Down. Bearish.
Okay. All right, perfect. So if you're expecting it to go down, what type of position would you take on this? Is this like a day trade, swing trade? What type like how would you be look like where would you be looking to take this trade to? What level?
Because it looks like it's kind of like consolidating, I would say right now it's a day trade until I know what direction it's going to continue, then it'd be a swing.
Okay, perfect. What I'm gonna do is I'm gonna let you finish. I'm gonna let you finish marking up, and once you finish your markup, we'll be able to determine what type of trade you're looking at. I don't want to. I don't want to throw you off. I don't want to. I don't want to throw you off, and I don't want to stop you from doing what you're doing because I want to make sure that you understand it and you can explain what you're doing. And then any corrections that I need, feel like I need to make or something, I'll do it unless you stop and ask me. Okay.
Okay, okay, sounds good. Sounds good. Okay, so I'm gonna go back and draw my tread lines. Um, here to there. Okay, okay. I feel like that probably wasn't the best place to put it, but let me just do this here. Okay. So now at this point, because like at this point, I don't feel like it's chosen a direction. Like Ron said, it's like consolidating. So I'm waiting for it to either break this point of resistance. In that sense, I would assume that it's going to be going bullish. But if it breaks this point of support, then I'm going to say it's going to continue going bearish, which at that point, once it breaks through the line of support, I think that would be a better place to enter because you'd be more sure that it's going to be going in that down direction versus if we keep the trade, if we try to enter the market while it's still bouncing between this resistance and support, we don't have as much confirmation that it's going to be going in the direction that we think. Now, this is probably where I probably need your help, Zay, in terms of like at this point when it's like consolidating for me, I'm kind of like lost of like now what do I do with this chart and like how do I properly like line out where I need to assess what is my confirmation of when it breaks structure so that I can enter.
Cool. So, um, all right. So right now you're on a 1 hour time frame, right?
Yeah.
Go to the daily. I need to look at the daily
Okay.
because I think the first thing you want to do is you want to look at the daily time frame. And based off of what you have, I'm gonna let you fix it real quick. But based off of what you have, so this is what I would do, and this is just my opinion, because
Mm,
from what you have right now, I'm a
mm,
little unsure on exactly what to do from there, right? And the reason why I say that is because what you want to do is you want to make it very simple for you and simple to the eye. You have, I see you have the high at the very top. You have a high,
mm,
a low, a lower high,
mm.
an equal low, and then we got like a lower high right here, which you have drawn out all the way. And let me just annotate on your screen really quickly. So what I was saying, everybody, he has a high here, a low here, a lower high, an equal low right here. So, and then we potentially can have another, lower high happening here. Um, you kind of like cut off the market in a way, and it's very, how can I say this? It's very kind of condensed it to the point where it's kind of hard to read exactly what's going on because this is definitely consolidation that you have marked right now, but you
Mm,
can you still are able to trade within that because if you're waiting for market to um come all the way down here before selling, you're
mm.
waiting a good amount of time where you could have potentially caught a sale off of this move right here. You see what I'm saying?
Yeah.
Um, so what I would do is I want you to, and I know you kind of already done took your time doing this. It looks beautiful. I'm gonna say that. But
Okay.
yeah, yeah. What's up, Ron?
Before you go any farther,
Yeah.
Hmm.
I want to ask the people that are on this chat if they've noticed the biggest mistake he's made on the chart so far. Because if and I want to see if you can see your own mistake. Because the reason why I'm
Well,
pointing this stuff out is consistency is important. Correct. What's wrong with the trend line?
well, to me, he didn't draw the trend line on a higher time frame.
No. So on a downtrend, a trend line marks what point of the chart? Your point should touch what?
Oh, the
From high to
resistance.
low.
No.
From low to high.
From your lower high to your next lower high. He connected his higher high to his lower low. So you're not getting a proper trend. So if you guys are marking it, it makes a huge difference for break of structure. So that line should be touching your lower highs. So it should be on your higher high to your lower high to your next. Yeah.
Okay. And this should be like this.
These things make a huge difference when you guys are marking up charts, guys. Right? You guys need to. I know it seems nitpicking, but when you're marking it up, how else would you know if it had a proper break of structure? Right?
Right. That makes sense.
So I just wanted to point that out. So I'll let you
Okay.
continue.
Ron,
Yes.
Ron, from
Yep.
from this chart, I know right now it's consolidating, but it's bullish. Do
I'll
you
let
see a
Zay
double?
and that stuff handle it. I just wanted to fix that one
Oh, okay.
error because
Okay,
it's
sounds
an
good. Thank you.
important thing for you guys to notice.
Perfect. Thank you.
All right, go ahead and finish with your question, though. I want to hear what you were getting ready to ask. I'm not sure who is that speaking, but I think whoever was getting ready to ask Ron that question.
Oh, sorry.
Yes.
Um, sorry. So it looks like on based on the chart, it looks like it's bullish, but currently it's consolidating. So I'm not sure if I'm seeing a W in the making there from the higher high and then double bottom and then going up.
I can see that as well. I see that as
Yeah.
well.
Okay. So um I don't know, from what I can see here, it looks like it's going to go up after it hit that FVG there.
I see that as well too. I see exactly
Yeah.
what you're talking about.
Yes.
Okay,
Okay. Sounds good.
cool.
Thank you.
Perfect. Good eyes on that. All right. So what I want you to do really quick, and I'm gonna do. Let's start this all the way over. Just because what you have is right, but I want to make sure you clean it up just a little bit, and I'm gonna guide you through that process. Okay.
KK, sounds good.
All right. So anyone that's on this call right now, this is exactly what I want you to do. Let me talk. I think I got annotations up here. Let me see if I got anything I need to remove. Yeah, draw up here. Oh no. Okay. All right. So first things first. Um, the first thing that you want to do when you hop on the chart is usually we go from the daily 4 hour, 1 hour, right? So what you want to do in the daily time frame, you want to figure out the first thing you want to figure out is where am I? And you ask yourself where you are, and that's basically the most recent candlestick or the candlestick that hasn't closed yet. That's where you are. So put your cursor on that candlestick that's still forming. Perfect. All right. So right there is where you are. Now, from there, what you want to mark up is your lowest low and your highest high that you see on the chart. You want to mark up that resistance and that support. Just draw, hold on, wait, before you draw the rectangle, I mean the rectangle box, just put a um horizontal line on the highest high that you see on your chart and the lowest low. If you will, slide your chart over to so I can see more of the not that side, the other side, the left, more to the left, and pull it up some if you can. Sorry,
Yeah. Oh, good.
and pull it over to go to the right. Yeah, pull it. Keep pulling, and kind of zoom it down, squeeze it down some. Yeah, I want to see. Yep, that's it. That's what I want to see. So your highest high and your lowest low. Draw a horizontal line on those points.
Okay. Highest high and lowest low from the point where I'm at right now.
Yep, the highest high that you see on the chart and the lowest low that you see on the chart. I mean, the highest one, not the most
Oh,
recent, but the highest.
okay. And then-
Awesome. Now I got a question for everybody on the call. He marked up a high and a low. Is that the highest high and the lowest low that we see on this chart right now? Yes or no?
No.
oh, this one.
There we go. Perfect. All right. Now, from there, what I want to see is I want you to zoom out a little bit more and I want to see have we broken any have we broken so okay, just zoom out a little bit. I want to see the overall trend right now. I don't care about this consolidation mess right now. I want to see the overall trend that we have right now.
Okay. So
An easy way to see that is if you click on the weekly.
okay.
I just so small right there. It's like it's cut off a little bit on the left side, or am I tripping?
Yeah, it is cut off. I don't know why that's happening. It might just be my computer not loading.
Oh, okay. You're on Forex Raw Majors. You look like you're on something completely different. Go to do GBP USD and do forex.com. Type it in again. Do well, you might be because of what you're using. Because you're on trading Telegram, not Telegram, Trade Locker. Um, why does it look like that?
I can go to Trading View if you want.
Yeah, do that really quickly if you don't mind.
Yeah.
Because for some reason it's cutting off your chart, and I don't know why. And guys, what we're about to do here is literally show each and every one of you guys how we mark up our charts here. Because the main thing is you want to figure out what the overall trend is. Once you figure out the overall trend, you only want to trade in that direction. I heard someone mention that they think that the market was going bullish, and honestly, for me, not even seeing the full chart, it looks bullish to me overall. So I wouldn't even be looking for sales, honestly. Um, and once Isaiah pulls his chart back up, I'll explain why I was seeing straight buys. And that's if the overall trend is bullish, which I think the overall trend is kind of showing bullish. But we're gonna go until once he pulls up trading view, we'll be able to see it, figure out exactly what's going on.
Say one more question because this one actually haunts me every time I put my structures there.
Mhm.
Um, so when you check, because like me, I always check my daily, so for me to know what is the bias for that particular pair. So now when I try to put in my structure, draw the line, and then put my boxes there, how far can I go back? Because sometimes I see the highest high would be like 3 months ago.
Right, right. So what you do from there, you start scaling down, well, not necessarily scaling down, but let's say if you see the highest high, and then you start seeing, let's say, a lower high, and a lower high, and a lower high, you're gonna get. So what we want to do is we just want to see what the overall move is, or what the overall trend is. After you figure out what the
Okay.
overall move and overall trend is, then you want to start getting closer and closer to the most recent highs and lows of current price, if that makes sense.
Okay. Yeah,
All
because
right.
sometimes that is confusing, and so I always go back to 4 hour time frame,
Mhm.
have a better understanding. But I don't know, does it affect your type of trading? Like if it's a swing, then you would expect like that's fine if you go back 3 months of trading
I per
results.
I potentially literally I ain't even gonna lie to you. I feel like 3 months. Looking at a chart
Mm,
from 3 months past, really, it's important, but the type of trades that we hold, we're not looking to hold a trade for like a 3 month high or a 3 month low, if that makes sense. Like a
okay.
like a high that's like we're probably taking a trade from the most recent high to the most recent low. The only reason why we're going so far back is to get an idea of the actual direction that the market can potentially be going, and to
Okay.
see like what the major highs and major lows are, to see what's the
Yeah.
overall direction the market has been going in.
Okay. Because yeah, because I notice sometimes when we do these discussions, sometimes we put in our boxes at 4 hour time frame, and sometimes when you're doing like a live session, you're doing a 1 hour. So sometimes it gets confusing
Yeah,
as to
yeah, I got you. I got you. I'm gonna explain
okay.
it.
Okay.
All right. Cool. So now we on trading view, we on GBP USD. All right. So now you marked up the highest high and the lowest low. Now, if you can, um, let me see more of the left side of the chart, if you don't
Okay.
mind. Okay, perfect. That's all I needed to see right there. So, guys, what I'm seeing right here is market overall, like overall trend for me. And sometimes when you mark up a chart and you're trading, you got to literally lock in and stake what you see, not what anybody else is seeing, not what nobody else is thinking. At some point when you're trading, you have to be clear out all the extra noise. So me looking at this, and this is my opinion. Like I said, I'm no God. I don't know everything. I'm not right. I'm not right about everything, but I'm going to tell you what I see and what I think. So overall, right, I see this as a major low. I see this as a major high. All right. The next thing that I see is another major higher low, and then another major higher high. That's my opinion. All right. So if I was to draw a Fibonacci retracement from this low to this high, right? Isaiah, if you don't mind, do me a favor, draw a trend line. I mean, a Fibonacci retracement from that low and that high I just marked up. Oh, wait, not that one. Start when you're drawing so this right here, I'm looking for it to go from this low to this high, which means you're starting from the bottom and going to the top. All right, perfect. Now, we all can see, let me check. Uh, t- 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 okay, so 0. Okay, perfect. This is it. All right, so from this move right here, we have that low here, that high here, and then what we expect the market to give us is a higher low. We can see market came here, right, and then eventually came lower. So we all know how the market likes to do, right? If we're looking for market to, and I don't like this orange. I'm sorry, hold on. Let's do black. All right, so do black. Okay, so from this low to this high, we all know that we're waiting for market to retrace, right? We're waiting for market to retrace and give us a 61.8 retracement. Now, the thing with this is market literally gave us the move we were looking for, but ended up going lower, right? Coming lower to our 78.6 and then going up to smack our take profit or basically come back and create an equal high or whatever you want to call it. All right. So in this case, this was actually a low, high, higher low. All right. So that right there let me know uptrend, bullish, off rip. Then market came and gave another high right here. All right. So from there, we got another high. If this was the last higher low, this is the new higher high. I'm drawing fear from this low to this high. All right. So if you will, draw your fib now from this new higher low to that next high. Okay, perfect. Now, what I'm waiting for is we got this low here, we got this high here, and now everything that's inside of this is now a retracement for me. All of this right here, all of this mess that you see right here, this is the retracement. I expect market to come here. I'm expecting the market to go bullish because of what I'm seeing here. So off rip, I'm looking for an opportunity to get in for a buy. I'm not looking for a sale. I'm not thinking, oh, market gonna hit here and then jump down and go all the way down here. This is the true low. If market breaks that, then I know it's bearish. If market breaks this, I know that we continuing bullish. But market can come lower than here, market come lower than here, and it still could go up. It can do this right here and still go up because it respected this true low here. All right. So I don't want you guys to get confused or get conflicted about consolidation or what the market could potentially be doing. So honestly, truly, this right here is why I told you to mark the most recent low that you saw. I mean, at the lowest low that you saw and the highest high that you saw, because anything inside of this is what our focus is on right now. All right. So from there, what I want you to focus in on is you have that major low and that major high, right? Market created a higher low and a new high. Now, what we need to figure out is how can we get an entry so we can continue with the overall trend? Overall trend is bullish. Yes, right here, this is consolidating. It is 100% consolidation. So me personally, I don't really like it, right? But I know according to my bias and what I think the market is going to do, I need to see something get higher than this to
Hey,
continue.
Zay, can I add something real quick? That's also important. Um,
Absolutely.
when you have your markout rate now on the daily, the one thing that a lot of people underestimate is can you scroll over so you can see a little bit of your right? So you can see where is because you need to all know the other way because what you want to do is let's determine what the pip count was from that lower low to that higher high that you have. How many pips is that, right? Because this will help you determine whether this is a like you're taking a day trade if it's a swing trade because like if that's a 600 pip movement, right? It gives you a little bit more leeway of how to determine how to take this trade.
154. So that's almost close to 1,000 pips. So that's definitely a position trade. That's not even a. I mean, you're basically taking it from one. You're taking it from a swing low to a swing high. So it's kind of like a swing trade, but that's a position trade because think about how long
Mm-hmm.
someone held that trade. That's a very long trade. Me personally, I'm not even. If I'm looking at this trade, of course, I'm not holding a trade for almost 2, 3 months because that's probably how long it took, honestly. 2, 3 months before the market got all the way up there to create that new high from that low, from that higher low to that new high, from this low right here to here. If
Right.
you was to start your measurement tool from here and then go all the way to there, it'll tell you how long it took for market to go all the way up there. That's probably like a good 2 months, if anything. You know, each candlestick you see is worth a day. So that's a very long time. Right. Me personally, I'm not looking to hold a trade that long. So um this is what I mean by how need to determine if you're taking a day trade, an intraday trade, a day trade, a swing trade, or a position trade, right? You have to understand that part. And depending on how long you're actually taking this trade, you will understand that for someone who's holding a position trade, right? If they're getting their entry anywhere between here, they'll probably have their stop loss below here somewhere, right? Their entry probably like somewhere right here. and then their take profit is all the way up here. You know what I'm saying? So for someone who's thinking to, okay, well, they're going to get into this trade and put their stop losses in these little bitty areas, they could potentially be kicked out because ultimately the last low is here, right? So this is the part where you got to be mindful to understand that you're a small fish trying to trade in a big pond. Like
Mm.
you need to calculate what makes the most sense within this consolidation. All right. So with that question that was asked, how do you basically going back so far, this really doesn't tell you much right now. All right. So this just give you an idea of which direction the market is going in. You have a low here, higher lows, right? That right there can automatically let you know, okay, let's draw a trend line, right? You draw your trend line going in this direction, and then you draw your trend line going in this direction, and then we see what makes the most sense from there. Then we can start getting closer to current price and determine, okay, well, market created a low here, created a high here, a higher low here. Okay, maybe we can continue riding the trade up, going in that direction. You know what I'm saying? So from that, right, you have the low and the high. Now I need you to go ahead and remove this fib, Fibonacci retracement. And now we got to get closer to this current candle. Like we got to find a way to get close to that current candle. Like this is too far. This high and this low is way too far from current price, right? So what you want to do now is now from this low, this high, figure out your next low and then the next high that you got from there.
Okay.
Yep, the overall, don't worry about the small stuff, worry about the overall movements that you're seeing.
Okay. I'm gonna extend this because I think this could be considered as a double low, correct?
Mhm.
Okay. And then we have this, and then this
Perfect.
is where it starts to change.
Perfect. Now from there, I want you to go to the 4 hour. Now you already did what you need to do on the daily.
Okay.
Boom. Now. What I want you guys to see now is slide over to make it. Yeah, yep. Let me see. Yep. All right. And now what? So now what I want you to do is this is the only part that I need you to focus in on now. We already done went from all the way up from that high and that low. Now we need to get closer and closer to right here. We need to get as close as possible here. But now you have what I need. This is what I tell you guys. I need to see at least 4 boxes on your chart. What I mean by that is you have this high, this low, this lower high, and this higher low. That is perfect. All right. That is awesome. That's what you need. So what I want you to do from here is I want you to draw a trend line from I want you to draw 2 trend lines so you can understand which direction should you be trading in right now.
Okay. So we got this one here.
All right, I like that. I do like that.
Yeah.
That does make sense. But don't forget you had all of this right here first before that happened.
Okay. So I'll go zoom
So
out.
ignore that right now.
Okay. Okay. So we got this one, and then we have this one starting to go.
Make sure it touch that lower high right there.
Okay. Okay. So here.
Let me see. Right. Break it down a little bit more. I want to show you something. Break it down some more. Like when I say I want you to actually like touch it, you know what I'm saying? Like I need to see like multiple touches at this area.
Oh, multiple touches I see. Okay.
Yeah. Like
But
don't,
these
yeah, just from this and this. Focus on that right there first.
okay. Okay. So we're not focused on this other one here.
Not yet.
Okay. 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 And then we can bring. Can I end it here because it's gonna crash into the.
It's fine. You can bring it there. Yeah.
Okay.
Cool.
Okay.
All right, cool.
Okay.
So from there, right, what we see is we see a high, low, lower high, equal low, right? And then another lower high. We see that. But we also see, right, this was a lower high, this was a lower high, this was a lower high. Like we ended up breaking, as you can see right here, we broke this with this move. So we broke here, right? Don't like one thing you can't forget about is these little bitty lower highs and everything of that nature too, because you want to make sure that you're understanding what the market is doing. Market gave you a downtrend right here. And
Right.
then for some reason we ended up breaking this lower high. So we shifted the market.
Yeah.
Then market came right back down, right? But check this out. When market created this low, right? This was the new high it created. It did not break below here. All right. We respected here. So we held this support. So the reason why we held this support. Now we have these little bitty lower highs, right? Let me delete some of this stuff because it's looking crazy. You have this lower high, this lower high, this lower high, this lower high, right? Market then created this equal low, created a new high that broke above these previous highs here. And then what market do here? Created a higher low. All right. So with market creating a higher low, right? And then if you was to draw your box out, you can kind of see how market literally created a nice little head and shoulders pattern.
Mm.
All right. So
Okay.
from there, it's multiple things that can happen here. This is your most recent, and this is the thing that I personally would do, right? Um, this move has already happened. You're pretty much trading because once this low happened and this high happened, that's a break. That's a break of this trend line. Even though, you know what I'm saying, we have a trend line way up here, that's cool and all dandy. But right here, we gotta make sure that we understand what market got going on. Market is creating this downward trend or whatever. We broke it. All right, we broke it with this. We retraced, we retested this support, and then we ended up going upward. All right. So just based off of that itself, that shows a reversal that happened. Now we understand if we was to draw our fear from this low to this new high that was created in the market,
Yeah.
as you can see, market gave you a nice retracement,
Yeah.
and then it ended up. Now we should expect market to either break above here and close and create new highs, or if we get a rejection, right? Because we can't do anything right now. We can't even get into this trade because we're trading in the middle of a move,
Yeah.
right? So what we need to see market to either break, if you can, zoom in closer to that that area that you're at. Yep. Zoom in as close as you can. Perfect. All right.
And what's
So
the tip count from on your Fibonacci from your
From where?
from where you drew your Fibonacci? It's always good to know the tip movement because it also helps determine is there enough movement for what you're doing wanting for the trade, right?
Okay. So from my low here to, or no, from which
Yeah,
movement are
from
we
your low to
parsing?
your high.
Yeah. Okay. From here?
Or even from your low, like your lower low, from where you
when you
started
started the Fed,
Oh,
to
when I
the
started the
top
fifth.
of.
Okay, my bad.
Yeah.
Okay, sorry.
The reason why I'm showing you this, guys, is because this is something I do a lot with DJ, right? With volatile pairs, it's going to give you what is the movement, right? Because that movement could be 20 pips or that movement could be 400 pips.
Okay.
it's a 400 pip move. So now
Right.
when that retracement happens, right, you should at least get a 200 to 250 pip retracement because you're looking for it to come to your 61, you know what I'm saying, your 61.8 area or your area
Right.
of interest. Because you
Yeah.
basically want the market to give you at least 50 to 61.8% of the move that it made of a retracement before you enter it. You know what I'm saying?
Yeah, yeah.
So based off of this, right, if we know now that market has hit an area and respected this support level, now what we should see next, if we understand how an uptrend works, we have a low, high. Sorry, I put that high a little too low. So a low, a high, a higher low, and then our next thing we should be expecting is the market to create some type of higher high or
Right.
equal high. Right. But right, like I said, right now you will be inside of a trade that you don't know which direction to take the market in because for one, the market is still moving. Right. What you need to see, if you're thinking market is still in a downward trend overall, what you will want to see is market to take out this high. Market to take out this high and not technically break above it, but reject it.
Yeah. Right.
Because once we reject it, and then we go right back below it. Drag this out a little bit more to the left. I mean to the right if you can. Like make it
Oh shoot.
right, perfect. So if you're not already in this buy, honestly, truly, right, what you want to see is you want market to either break above with a candle and close. That's going to let you know that market is going to continue bullish.
Yeah.
Or if you see market kind of reject it, right, with a wick, you can what you want to see now is a rejection, a pull back in here to look for your sell opportunity to continue selling it down. Now, where would you target? If we make it make sense, your first area is this area first. You need market to break this first before you can even consider it to go down here. But the way that that will work is, again, it it's kind of hard because now I'm thinking like you have to determine what type of trade you're going to take from this. It can be multiple ways that you can take it. You can take it from major low or the most recent low. Me personally, I probably would take this as like a day trade because if I see that market is creating these little bitty areas right here, and then market decides to break back down and retrace, I'm looking to probably target here
Yeah. Right.
because I'm gonna have like a small stop loss above here. My entry is probably gonna be like right here or something, and I'm looking to target here to where I probably have like a 1 to 3 type risk to reward. That's just me. But if you're looking to hold this trade, you will have to understand like that you're taking it from the most like your stop loss is above the most recent high, and you're gonna take the trade to the lowest low, right? Like
Okay.
that's kind of how like you have to determine based off of what type of way you're trading it. And
Okay.
it all boils down to the time frames that you're using.
Right. Okay. So then, in the sense
Can
that
I
it
also add
breaks.
something real
Oh,
quick on a risk management level?
yeah.
The reason why what Zay just mentioned is very important, right? What time frame are you looking at this trade at right now,
4 hour.
right? How many movements did it make? Like if you were to zoom in on the daily, now that you have that, right? And then you kind of zoom in, it kind of gives you a better idea of how many moves it did in that day to give you where your zone is that you're looking to determine whether or not it is a day trade or an intraday trade, right? Because when
Okay.
you look at the 4 hour, this looks so much different on the 4 hour than it does on the daily, correct?
Yeah. Correct.
So if so this is where you need to, like Zay said, determine how you want to take this trade. And remember that that whole movement was 200 pips.
Yeah.
So that if you're doing a lower time frame, your pip counts are going to be like 30 pip movements, right? So
Yeah.
don't over leverage your account. So that's all I wanted to add. This is one way to determine how you want to take the trade. If it's going to be an intraday, day trade, when you add all these little things in, it'll give you a clearer vision of what you want to do with that trade. That's all.
Right. Okay. Makes sense. Makes sense. So then my question is, so let's say it breaks this resistance, right? It goes like, let's just say, let me go back to the 4 hour that we were on. Okay, so let's say uh it goes down and then it goes up again, right? And this is, let's say this is the new high, right? Then I'd be slapping my fib here and waiting it for go to 61 80 if I wanted to buy it, right? Because I want a full
Yep.
retracement and then
Basically.
buy. Okay.
Yes, basically. Yep.
Okay.
Because then market just created a new high for you, right?
Right.
So once you get that new high, which is probably up here, you want to see market create. So you have this high, then the higher low, higher high, and then you want to expect that like some type of higher low to get formed again to continue up. But remember, you can't really confirm if the higher low is going to be formed yet, or if this is a true higher low, whatever, until you draw that retracement trend line on the lower time frame, right? Just to collect all these, because if the market is retracing down, it's giving you lower low, lower high, 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 and then the moment that you break above one of these lower highs, that lets you know that the market is now going in the opposite direction that you were looking to get into, and then you can easily, wait for market to come and retrace and place your stop loss below here into the market here and take profit. You know what I'm saying? Way up here. Like,
Okay. Makes sense. Okay, so then we got to go one more because we're only at 4 hours. So we got to go 1 hour, correct?
And the thing that's so hard about this trade right now is because it's already making the move, like it's
Yeah,
already
it's
gonna
already making
happen.
that.
So it's you kind of late to the party.
No, that's fair. That's fair. I haven't gone into it because I was so confused about like how it was consolidating. And the thing that I really struggle with is because when we're looking at like the materials that Mino has given us, it's easy when it's obvious of like the retracements and things like that. But when things start to consolidate, I get nervous and then I don't trade it. But I know that it's not always going to be that simple. So understanding like how to trade when it's consolidating is something that I'm trying to work on.
I like that you said something right there. You said when you see consolidation, it gets very confusing. You don't know how to trade it, so you don't trade it. And
Yeah.
now you want to, but you're trying to learn how to trade it.
Yeah.
You don't trade it.
Okay.
That's consolidation. You do not trade consolidation.
Okay.
If it gets confusing and you can't understand it, don't touch it. Don't bother it. Don't trade it. Because that's the worst thing that you can do for yourself is trying to figure out how to make something work when it's just not clear to you. That's one thing about the market, guys. You have so many options, so many pairs that you can trade. If you
Yeah.
see a pair that's very confusing and you can't figure it out, don't touch it. It's the reason why it's confusing you right now. You want to trade stuff that makes sense. If you see highs, lows, like a perfect trend, and you
Yeah.
saw a low, then the high, and then you're like, oh snap, market about to create another higher low. That's the trade that you want to be looking for. But if you're looking at the trade and you can't tell if the market going up or down, left, right, you know what I'm saying? Ignore it.
Okay.
You, and I want everybody to understand, do not try to force a trade or trade consolidation. That's something that you want to avoid because that is nothing but accumulation. People gonna
Okay.
buy, sell. Now you don't know which direction to go in. Market's gonna accumulate orders, manipulate those orders, and then distribute after you already got taken out the trade.
Understood.
So
Hey, Zay, can I add something to this real quick? It's something I
absolutely,
really learned, and I
absolutely.
think it'd be beneficial for this question is that you got to remember where was the consolidation notified? We noticed it on the daily, right?
Yeah. Right.
But we're looking that consolidation is like a 400 pip move, right? But
Right.
the overall trend that we've determined is an uptrend, correct?
Correct.
So the way I would trade the consolidation is like we did, we marked it up on the 4 hour.
Yeah.
We've got our zones. I would only be looking for buys in the consolidation because the overall trend is um, bullish, unless it breaks trend, which it did on the 4 hour. So we don't know if it's going to continue bullish for the daily or it's still going to consolidate.
Okay. Understood. Makes sense.
So if the overall bias is still bullish, I would be, and we want to trade within that consolidation zone. That's where your support and resistance levels within the consolidation is your new higher highs and higher and lower lows. Only if it makes sense.
Right. Okay.
Does that does that kind of clarify it?
Yeah, that clarifies it.
Because that consolidation movement was like months in the making, so it wasn't like we're trading consolidation within days. So that's where your 4 hour time frame and breaking it down on the lower time frame because of the pip movement makes it worthwhile to still trade it properly.
Okay. Makes sense. Okay. Is that all of it?
For this one in particular, yeah,
Okay.
because right now, I mean, even looking at it still, like I'm still kind of torn in between the two, whether I'm ultimately buy or sell, because truly we still have this lower high, this lower high,
Yeah.
this lower high. You know what I'm saying? So let's say you, and of course you can't get into it now because the move has already happened. Like you want to buy here. So buying now is you're pretty much buying in no man's land where market can literally fall from here
Yeah.
or market can literally break above here, right? But you
Yeah.
don't want to take those chances. Your best bet is to, when you're looking to enter off a trade, you want to enter a buy at a higher low or sell at a lower high.
Right.
Simple as that. So right here, I say if market does not break above here and it rejects it, something like, you know what I'm saying, comes down here and then comes back below it, comes back here, I'll be looking to sell it. And the
Right.
reason why I say that is because this is a strong resistance and we've seen market create this high this lower high, and then right here is another lower high. So if market decides to reject this area, there's a potential that market can literally um continue to drop low and probably come to this will be like my target area, this low right here. But even then, like I said, like I'm still slightly confused on which direction I would probably trade this in. So I
Agreed.
will
Yep.
probably have to like mark this up for myself to really figure out exactly what I'm
I
seeing
actually have a
here.
question. We
Yeah,
have
bro.
19 people on this call. How many people would do a buy and how many people would do a sell? Just pop it in the chat. Because I can tell you right now, I'd be doing a sell. Why? Because it hasn't it hasn't created a new higher high,
Mm.
and there's the potential that this movement could go down and create a new lower low or an equal low. But until this movement breaks that trend, because it can make an equal high, this is why we need to be patient to see where this next move goes.
100%. Because you only have a few options. You need a breakout retracement to continue buying here, or a break
Yep.
below here retracement to continue selling, or you need a fake breakout retracement back in and then sell off, or you can get like a fake break below here, retracement back up, retest, and then like it's so many options and ways that the market can move. My main thing is if I sweep liquidity at this high, I'm probably going to look to take sales. If I sweep liquidity at this low, I'm probably going to look to take buys. But at this moment, right now, where we are, this is a no trade for me because we're at a high point. So I don't
Yeah.
know what the market's going to do from there. So I can't make a decision off of that. Right. What I
Yep.
do know is I see, like Ron said, we have this high, this equal low. And the only thing about this is that we have an equal low. Right. We have an equal low. Market can literally just came here to just take out this little area for the code continue going down too. It's multiple ways that this thing can play out, right? Um, I would just say for me, this is just a no trade right now because we're still inside of a overall move from here, right? I need to figure out what's market going to do from there.
Right.
And
Okay.
so with this trade, this is probably something I would sit on hands about. And if I'm looking like for example, if I'm looking to take a sale, I need to see a higher low broken. Let's say market keep going up. I just need to see market probably do something like this, and then I'll look to target this area potentially. And if market decides to break above here and close above here, of course you have to deal with this to your left too. You need market to break that, and once market breaks that, it's definitely coming to target this. So, the only thing that you really can do with GJ right now, is really wait. There's really no other options right now. You could get in a small little buy and catch it up to here, but you're
Mm.
kind of trading in the middle of no man's land.
Right.
Like I said, your trades want to be at the very low point or the very highest point of market. But right now, you're approaching a high, so I wouldn't bother getting into that shit. But
Understood.
I think you did an amazing job, bro. And like I said, marking up charts, guys, it is not as easy as it looks. I'm not gonna lie. It's not as easy as it looks. Like I can mark up a chart and you guys like, dang man, they can mark up a chart so easy. Y'all, it's times where I look at a chart and I get confused, right? I might have a little anxiety. I might get thrown off and I'm like, damn, bro, I don't really know what the market doing. When I feel like I gotta over analyze a pair, I just go ahead and don't trade it. If I can't mark up a pair in like less than 5 minutes, I don't want to trade it because I'm confused, right? I need to find something that's clear, that makes sense. It's easy for me to understand to take my trades. That's one thing that you guys have the opportunity to do when it comes to trading. You get to choose what pair you want to trade. So if it doesn't make sense, it looks too choppy, it looks too confusing, it's a whole lot of wicks, a whole lot of craziness, just avoid it and find something else that looks more clear. But Isaiah, shout out to you, bro, for taking the time to, go through that, mark up your chart. If you got any additional questions or anything like that, make sure you message me privately. Also, I do want to honor you a one-on-one because you did take the time to, go over your chart and mark up things. So if you will get with me after this call so we can, I can send you because I need to make an update to my schedule anyways. So send me a message, bro, so I can send you the calendar link so you can
Right.
request your one-on-one. I'm definitely gonna give you that, bro, because I appreciate you for taking the time to do that, man.
Sounds good. Thank you.
No problem. Does anybody have any questions for Isaiah, me, Ron, or anything? about what he just went over or what we just talked about. Okay, cool. So what I'm going to do, do y'all want me to mark up a pair before we hop off for the night? How y'all feel?
Sure.
I don't wanna, you say yeah?
Yeah.
Okay, perfect.
Before you mark up, I'm just gonna add one last thing tonight, and I'm quiet. Guys, see how difficult that was to determine what was going on and what Zay said. He's not going to trade unless it's like clean and clear. This is why it's important not to focus just on one thing when you're trading, because you could be waiting forever for that. So that's why we always say have 2 to 3 pairs or two to three um, assets you like to trade, so that while you're waiting for one, you still have chances to make moves with other stuff.
For sure. Okay. Cool, cool. So, I will go ahead and mark up a pair for y'all. Y'all got, I'm gonna let y'all give me a suggestion. Please don't say, I end this call if y'all say go. I swear. Nah, I'm kidding. But, y'all give me a pair that y'all want me to look at, that y'all want me to mark up. You know what I'm
I don't
saying?
think any good trader will be able to mark up that gold right now. It's going crazy.
I think gold, I ain't gonna lie, I think gold bullish as hell right now. That's just my opinion.
Yes. It is.
And,
It is obviously bullish, but
and
it's so hard to
yeah.
mark that a trend line there. You don't know where is it going to be your higher hikers. It's going up.
No facts. I ain't gonna lie. Once I saw gold create that high last week, I already knew it was gonna continue bullish. I actually marked it up. I didn't trade it. And what bothers me the most is like when I mark up gold and I don't trade it, it play out so well. But the moment I mark it up and call it a trade or try to get into it, it manipulates me so much. Like I literally marked up gold and I'm like, bro, this right here, I'll show y'all this shit. And I was okay. I was okay not taking it because I'm like, bro, like. I already said I was gonna focus on currency, so I just wanted to mark it up and see how it was gonna react after it created. Um, and let me share my screen really quickly. But I kind of had a feeling gold was gonna do what gold was gonna do. I already could tell from the way that they made that move last week, and I marked it up. It hit my negative 27, and I was a little aggravated, but it is what it is. But I definitely want to tell y'all that I'm gonna make it my business to master gold because I know a lot of y'all like trading gold. I'm gonna make it my business to master it. But for now, I also want you guys to really focus on other currency pairs too, because gold is a greedy son of a gun. All right. So I'll just quick little explanation. Because I know, like I said, I know y'all like to trade gold, but as y'all can see, um, here's y'all favorite pair, right? This move that gold made, right? Let's see, I think this was the unexpected move that they made last week. It's basically this right here. So now we can easily see that gold is kind of creating these higher highs and higher lows. Honestly, truly, if you look at the higher time frames, man, we know gold was overall bullish. It was going bearish, and even when it came down to certain areas, we knew that gold was just looking to create some type of low soon. Um, I'm not gonna spend a lot of time on this because I'm not finna trade this, but I just want to, go over it for anyone that's looking at it. So right here. For example, the last major low that gold gave is basically what's right here. So the way that I was looking at it or anticipating for gold is basically from this low basically to this high, right? Once we start getting into this 61.8 or this area, I'm already trying to figure out when gold was going to start buying. I wasn't sure, you know what I'm saying? Because it came here, shot up, and then started going back, trading below here. All right, now when you look at it, and we're back above the 61.8. And let's delete all of this because none of this is irrelevant. It's all this is relevant right now. Um, but based off of that right there, hold on, wait, I deleted my trend. I'm in my feed. I need that back. I'm just gonna take this off. Did it again. All right. So based off of this right here, right? Once we broke back above this right here, for me, when I seen that break, which was that unexpected break that we got, I'm like, yeah, we're back above that 61.8. Now we have this that could possibly be our higher low because low, right? Ultimate low, high, higher low, higher high. Basically anything from me personally, I'm thinking anything from here to here. But of course, you have this double bottom or whatever, or this respect to the support. Gold respected this level right here, didn't go lower, right? Because this low created this high up here. So once we came here and we started respecting this, based off of that, right, we can now see the lower high, lower high, lower high, lower high, lower high. We draw our little retracement trend line or whatever, right? We can, choose to draw it from however you want to draw it. I like to just go from the most recent lower highs, and basically it's these, right? All right. So what I'm expecting gold to eventually do is basically just give us a nice little retracement so we can continue going bullish right now. So I'm not really looking or caring about what it's doing at the moment, but I'm just going to give you guys this quick little opinion of mine, and I'm going to say what I would expect from gold now is just a nice pullback or a nice retracement from this low to this new high, somewhere to retrace back to where we broke out from eventually, right? Somewhere back in here, and then continue up with the buys. That's all I'm giving out on that for now. Um, just something I'm just not gonna focus on, man, because I don't want people to get too tired in this currency pair until you actually do your due diligence and really focus in. Another thing that I want you guys to, my gold traders and my gold lovers, what I want you guys to really focus in on when it comes to gold is having a small stop loss, right? When you're looking to trade gold, I understand people say you need room or you need, you got to have a large stop loss for gold or you need room to trade gold. You technically don't. What you need to do is make sure your entry makes sense and you have a great entry, right? It's not a bigger stop loss, it's a better entry. If you know that the last lower high you see on gold, let's say if you're looking to enter here, right? If we enter this trade here, we know that if we're looking to place a stop loss, if this is your entry or this is your area of interest, your stop loss has to be above this last lower high right here, not where you're entering the market, right? It cannot be you enter this trade at this lower high and expect market to just respect this lower high. Right? Let's just go ahead and act like we were entering this trade right here. Let's say we entered it right here, right? We thinking, oh, this is a nice little area to get in this trade, right? You enter this trade right here and you place your stop loss right above there. Right? This not smart, guys. If you're looking to enter at this zone, right? You're looking to enter at this zone right here. You need to make sure that you put your stop loss above the true lower high or the last lower high, which means that if you're looking to enter and place your stop loss all the way up here, then guess what? Instead of having that crazy stop loss all the way up here, go ahead and move your entry up somewhere so where it'd be as close as possible. Let's say if you put a stop loss above here, let's put it somewhere up in this area, right? If stop loss going above this last lower high, entry need to be somewhere up in here, right? Not all the way down here. Entry need to be up here. And watch how much better you get with trading gold. If you know that your stop loss is at a true lower high, your entry need to be as close as possible. Don't say, oh, well, I kind of want to enter here and I'm gonna place my stop loss way up here. That's nonsense. Why would you get a market opportunity to go up all the way up there when you could have easily just placed the freaking entry all the way up there, right? Just get your entry all the way up there, right? So that's one thing I want the people that trade gold. When you're looking to enter the market and you're looking to place a stop loss, I don't want to see a stop loss that's more than, if you got a stop loss more than about 200, 250 pips, you probably don't need to be getting in that entry, all right? So if you have a big stop loss on gold, you probably don't need that entry. You probably don't need to get in that trade and you need to wait for market to actually come to you before you enter it. And another thing that you want to wait for, trade gold during New York session. This is just my opinion, what I've been seeing gold do a lot. New York session after 9:30 a.m. Eastern. So for a lot of you guys, that may be like 7:30, 8:30, if I'm not mistaken. I think y'all 2 hours later than me. So trade gold after New York session opens, but wait like an hour or two after New York session opens so you can see the liquidity sweep and then get your entry in the market, right? I would recommend trading gold during New York session only. That's just my personal opinion, right?
Yeah, and
You
that
might can,
that makes it challenging because New York
yeah,
session in Edmonton is like more like 6 o'clock in the morning till 3 p.m. or a lot of
Mm-hmm.
people is working.
Fact. Same for me because I just started working. Like I'll just be starting working at the time when that happens. So it's kind of hard for me to try to get into it too. But I'm not gonna lie, like I put it this way, like if that doesn't work for your schedule, that just means that you just shouldn't be trading it. You see what I'm saying? Like you got to trade something that works for you at the time that you know you can trade it. And like for example, I would love to trade London session. I found at times where I can actually when I took trades before London and I woke up, I always was in profit or I ended up hitting TPs during London session while I was asleep. But when I get in New York, I can't trade. So it's like I can't really trade London session because it's so late for me. Like I'm talking about 12 a.m., 3 a.m. because it opens at 3 a.m. So I'm asleep by 3 a.m. I would love to trade it, but my time zone doesn't work. So I have to force myself to trade like New York or Tokyo session. That's the only times I really can take trades, really. Really Tokyo session. If I could really lock in during Tokyo session, I probably will only trade Tokyo session because I'm off work. I have all the free time, right? It doesn't give much movement in the markets like New York does and London does, but it's a good time for me to trade because I'm completely free. But who really wants to trade Tokyo session? Which it is a good session to trade in. Not gonna lie, it is a good session to trade in. You just got to trade those specific currency pairs during that time. But I would say you get the most bang for your buck when you're trading gold during New York session, because typically what happens is um, market is kind of accumulating orders when it comes to before pre New York, it's accumulating orders, right? And then what happens is then you'll see like a liquidity sweep. And then once that liquidity sweep happens, then the move actually starts distributing. Like you'll see the accumulation, the manipulation, and distribution. If you just take some time to like back test what I'm saying when it comes to trading gold during New York session, you'll kind of see it like you're like, damn, you could have just wait, like, you know what I'm saying? For example, like just being in this trade, let's say if you was looking to, and this is just a random thing, but let's say if you're looking to get here and you see how much market kind of like played in this area, and then all of a sudden it just took the hell off. Let's look at the time. Let's look at this time. So market played here from Thursday. Well, this on the weekend and everything happened, but Thursday, let's see. So this is New York session, right? Market is doing this thing is playing right here, play right here, play right here. And then around this time right here, which is around like London, New York, you can see that big old movement that's happening here. So we play around here all the time, but you can see like New York session, which is about right in this area, how market's kind of moving up. And then this is probably like Tokyo session. And then Tokyo, and then London, New York. Then right here we have London. And then right here we have New York. So this 9 o'clock candle, 12 p.m. and then it shot on up. So I would say your best bets are looking to get into gold will probably be London or New York. I say agent sessions when you see stuff like this happening, these retracements. Retracements. Let's see. Yeah, by Asian. Asian session, this is doing this. Asian session, market is doing this. Wait, this is Asian session. Oh, this is New York. 9 o'clock a.m. This is Asian, London. Yeah. So I would say your best bets for trading gold is Asian and New York. Asian is really like retracement time. I'm not gonna lie. It's normally retracing the move that it made, and then London is like a more of like a manipulation, if you ask me, and then the distribution happens in the New York session. So I would just say take your time to try if you can. Just look at each session and how gold moves, and then you'll figure out which opportunities look best to you. But I would say, in my opinion, I see gold likes to move really well during New York session. Those when those moves actually happen. Prime example here's another 9 o'clock where gold shot straight up in the air. Another example, or another 9 o'clock gold shot straight up, and then right here another New York session gold shot. So I see a lot of moves when gold actually pushes a lot during New York, and then even in these moves, this is basically another New York type session. Right here, this is like Asian. This is London and then Asian. Yeah, so just play with the sessions. I would recommend. I mean, that's just me, my personal preference. I would say New York session for gold for sure, or Asian. It's when gold likes to do its move. So you can catch Asian accumulation or manipulations and then New York distributions. Um, but what gold typically likes to do is look for areas of liquidity and it wants to manipulate those areas. So even this right here, manipulating this, I potentially see gold manipulating this just so it potentially come back down. If gold comes back down here, we can best you can best believe gold is probably going to sell off. But I think gold is going to probably sell off to create um a potential higher low to continue buying. That's just my opinion, right? So you potentially could catch some type of move going downward, but I would like to see a high, low, lower high, and then taking it down to here. But like I said, you got to be, you got to know where your targets are for gold. Here's a target, and then I'll be mindful of this. But if I was to draw a Fibonacci from this high to this low, and that lower high would be my retracement, I'm pretty sure my take profit will be 0% here and a negative 27, like somewhere right here. So I don't really look to swing gold. I'm catching small moves of gold, but even if this, I don't see that as I don't see gold either going all the way down here, and it may sweep this and then continue shooting up. But after this break, we can probably see gold potentially still going up. But um, just be mindful when trading that. All right. Only like I said, I feel like I already got too far in that already. But anyways, that's gold. Now, really quickly, I'm gonna mark up a currency pair of your guys' choice, and then I'm gonna go ahead and end this call because I feel like we've been up here for a good amount of time already. So, is there any currency pair that y'all want me to, like a regular forex currency pair that y'all want me to
UJ,
look at?
UJ.
UJ, perfect.
Yeah.
I ain't gonna lie, UJ. After that huge sell move that it made with that news, I
That's
was
what I'm
like,
saying.
man, crazy buys after that. Crazy buys. Yeah. Yeah, 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 yeah. Okay. And I'm gonna tell you why I say crazy buys though. 'Cause I'm still seeing EU to drop. I'm not gonna lie, still see EU dropping, which is crazy. Go pushing up, but either way. All right, so for UJ, right now, I'm gonna mark up UJ. I'm gonna show you guys like exactly how I would do it and what I'm seeing. So first things first, UJ, I'm gonna go to the daily. All right. And off the daily, I'm going to make sure I answer you guys' questions. So the same thing that I show Isaiah, I'm going to show y'all too, but I'm going to show y'all how to get even closer to market and what to focus on. All right. So if I look at this chart, right, like I told Isaiah, I want you to look at your highest point and your lowest point on the market. Right. My highest point technically is here, and my lowest point is down here. All right. I'm not gonna lie, this is mad irrelevant for me to be focusing in on this low all the way down here because market has created a lot of higher lows from this low. Higher low, 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 higher low. Everybody see that? Everybody see all these higher lows that market has created since this lowest
Yeah.
low here.
Yeah.
Perfect. So from there, that's irrelevant to me. I'm only using that to show you guys what I'm seeing. Uh, oh, sorry. Um, I'm only I'm only looking to see what I'm trying to get as close as possible to market, right? So from all of these lows, I can see, okay, market never went lower than this. So, okay, let's move it up. Market never went lower than this. So let's move it up. Market never went lower than this. This right here, we did kind of like play at this area, but we never went lower. So that's a great support level right there. And then I'm going to continue to move this thing up to where I can get as close as possible to market. And I feel like here is a great area right here, right? Because all I'm trying to do is now I'm trying to sandwich market. I'm trying to sandwich market and I'm trying to get as close as possible as I can to current price. All right. So current price is literally here. Current price is literally here. Well, slide it over a little bit, but you get where I'm at with it. So current price is literally here, right? And all I'm gonna do from here is just mark up my most, not really my most recent, but my swing highs and swing lows according to where I am. So guys, if you're looking at this, what type of trend would you what type of trend would you say we're currently in right now?
An uptrend.
Bullish.
Uptrend, bullish trend, uptrend. Awesome. I'm gonna expand this because this is pretty much the same thing, if you ask me. and then we have this area right here, and then we have this. All right, cool. All right, so from there, guys, if I was to, you know what I'm saying, off of these boxes that I have here, I see higher low, higher low, higher low, and then potentially another higher low, right? So I see low, high, higher low, equal high, higher low, higher high, and then this higher low. All right, so from there, what I'm going to do is I'm going to delete. So first and foremost, I'm on a daily still. So from this daily, I'm going to look at where I currently am, which I'm currently here, but my previous structure is this low. So I have this low, this high, this low, this high, this low. All right, so I'm gonna remove this one. This is irrelevant too. Too far. So I got these one, two, I got these one, two, three, four, five. I have these five boxes. I'm gonna take this one off too, because I don't even know if that's a true high or low right now. Right. So what I want to do is this is where I'm currently at right here. I'm currently in this. All right. This is how I look at the market. I'm currently here. So I know I previously made this high, I previously made this low, I previously made this high, and I previously made this low. What I'm gonna do is I'm gonna draw a Fibonacci retracement from this low, these equal lows. So from this low, I'm gonna just do it from here, from this low to this high. All right. So from this low to this high, I got a 61.8 retracement and I got a new high. Perfect. All right. Now I got that already. Now I'm gonna go from this low. I want to go from this low, take this off. All I'm doing on a daily, I'm just trying to figure out the overall trend and draw my fib. So now I'm gonna go from this low to this high. Perfect. Now I know what y'all saying. Damn, that shit smashed through the 61.8. It definitely did. This was news. This shit shouldn't have happened, but it did. All right. So from here, we got my son is up there just making it hard for my wife right now. So low, high, higher, low, higher, high. Perfect. All right. So from here, this is where we get our focus in on. Now we have that low, that high, that higher low, that higher high. Let's take these boxes off because I want to make sure my chart is very clean and it's easy for me to understand what the hell is going on. All right, so now I only have 2 points. These 2 points are literally where I drew my fib from, this low, this high. Remember, if I draw the fib from this low to this high, nice retracement, perfect. If I draw the fib from this low to this high, we got another retracement, perfect. So I'm currently close to market. All right, now I'm gonna go to the 4 hour. Off of this 4 hour, right? I know these candlesticks start looking crazy. It gets mad confusing. Market always does that, right? Gets confusing when you get so close to it. So now from here, guys, if none of this would have happened over here, this is where we were looking to get in this trade, right here. So most people say, well, we would have lost this trade. How? Who agree that we would have lost this trade if we would have entered right here? Please tell me. What y'all think? Do y'all think we would have lost this trade? If we were looking to enter right here, we would have lost this trade. Yes or no?
No,
Why not?
it's because it tested 61%. So that pretty much set a good entry point, and we got our bullish engulfing. So we got the confirmation that it is going up, all right? So
Okay, so you saying you would have entered here and where you would have placed your stop loss at? You would have entered like if you would have entered here, would have been good.
my stop, pretty much how you have it. I'll probably do like a 1-2, no, a little bit higher for sure. Just around that 78.6%, around that area.
All right. Do y'all see the pip count on that bad boy? Y'all ain't never seen me or me no call a trade that's 100 and something, 170 something pip stop loss on a regular currency pair. I don't think y'all ever will see us call no trade like that. Let's say we go for the negative 27 because we want to see a new high right here. So let me move this up. All right. So now anything like this, we get 1 to 3. We want a 1 to 3 minimum. So if we go 1 to 3, let's see, a 1 to 3. Look at this, y'all. This is a 261 pip stop loss for a 789 pip take profit. Now, let me cool y'all on something right now. Let me check the chat really quickly. Okay, if you look to the left, the last lowest point. Okay, hold on. Look to the left, last lowest point. So entry here, last lowest point. If we being realistic, guys, if we looking to enter here, our stop loss had to go below this off of it. That is the last low if we're entering here. I ain't talking about none of this right here. The last true low is right here. So stop loss will have to go below here. This is very important, and this is the reason why I tell you guys, draw the retracement trend line on the H1. Draw the retracement trend line on the H1. Check this out. Now, if you look at the H1 and we draw this retracement trend line, right? It's kind of hard to draw it because market gave us so much crazy downward movement. But what I like to see is the lower highs. I focus on the lower highs when I say retracement trend line because I'm looking for market to retrace, which means it's going to give me some bearish retracement. So lower high here, lower high here. Okay, low. So let's pay attention. So lower high, lower low, or lower high, low, lower high, low, lower high. All right. So here's the lower high. All right. So now from here until market actually breaks above this, right? We're not looking to get into the market. What the market ended up doing was breaking above this area, breaking above this lower high. We had market create all of this bull crap because, like I said, we want to enter here regardless because we didn't break above a lower high. So we would even, yeah, this is our area of interest, but we still can't enter until market actually breaks a lower high of the retracement. Lower high, lower high, lower high, lower high. We broke it right here. From there, guys, from so you have this low. Let me go back because this actually is a lower high right here too. Before that, so that's the lower high too. Lower high. These little moves too. It's kind of hard to read them, but if you actually look at it, lower high, lower low, lower high, lower low, lower high right here. I personally would probably say this one right here, but you can say this is a lower high too. It is, honestly. And based off of that, what you want to see, let's say if you use this as a lower high, you want to see market break above it, and it did. Or if you want to say this is your lower high, you want to see market break above it, and it did. My thing is this. This was the true last little lower high market created before going up. Let's move that back. Let's say if you would have seen this and then you seen these candle break above, that's perfect. So right here you have this low, this lower high, this higher low, this higher high. All right. From there, right, from this higher low to this higher high, you want to see market give you some type of retracement from where it just broke out from. A retracement of where it broke out from is literally coming from right here. Boom. Once you see a retracement right there, then you look to take your trade, right? So now instead of having your stop loss all the way down here, right, you're now moving your stop loss. I personally would probably move my stop loss right where that last low came from in this case. But my entry is now here. All right. Now let's say that's 100, and now this is if you holding this trade. If you look at the risk to reward on this, it's a 1 in 7. So that just means like depending on how long you actually holding this trade, if you're doing 125 pip stop loss, because some people are because they're holding the trade for a very long time, you need to determine which lot size to use. If you have 125 pip stop loss, if you lose $1, that's $125. If you use a 0.05, that's 125 divided by 2, and so on and so forth. So you have to determine that. But for me, right, I'm probably won't even looking to use 125 pip stop loss anyways. So what I will wait for is that retracement. And when that retracement happens, right, which happened all the way here, market came and retraced right here. Because I said you want a retracement of where market broke out from. Here's the retracement. You enter off that retracement. Let's say you enter as soon as it retraces, market comes all the way down here. Now I'm not gonna lie, you technically don't know where to place your stop loss, but the safest area is literally below this low right here. That's the last low to your left. If you look to your left, don't place it right here. Look to your left, and then when you enter in here, this is the last low. Or you can wait for it to come back to the 61.8 and place your stop loss below here. But I'm just letting you know like how I look to enter that trade. And this is the lowest point that you can enter it, but your stop loss will go here. And based off of that, you know what I'm saying, you can dictate where you want to put your stop loss or how you want to use it. But when you place a stop loss, it has to go at the previous low, not the current low, the previous low. So entering this trade right here, let's say if you enter this trade like this, right, and you place your stop loss all the way down here, or if you decided to wait for the candlestick to close, which is probably, you know what I'm saying, you can do that too, but it's multiple ways that you can enter a trade. We can go down to smaller time frames and see what was the best area to enter. Me personally, yeah, I know I like to use fair value gaps and stuff like that. So I would be looking like for like a maybe like a fair value gap or something on the 15-minute time frame. Tell me, hey, bro, you can enter this trade at one of these FVGs here. And I'll probably be looking to enter off of that. So let's say once we got a breakout or something like that, I've been looking to see if we got anything in this area that I can be looking to get in the trade on. But let's say if I just stuck to the 1 hour, right? I don't want to throw y'all off too much. But either way, this is still not a bad trade at the end of the day because now you waited for market to come to your area, right? And let's say if you wait for the candle to just close instead of entering it and placing your stop loss here, or when this candle did close, you move your stop loss up to be safe. That's still not a bad trade. And now, honestly, truly, you can go break even from here because now you're at the lowest point possible in your area of interest where we want to enter at 61.8. You can be in this trade at break even. And where you have, I probably won't go break even, you know what I'm saying? Because what if market does come here? But even way, this is literally from this entry, market is literally up 225 pips. So that's a damn good trade if you ask me. But for UJ, in my opinion, I'm still expecting UJ to go up. That's just me. I'm expecting the DSY to start pushing up, and I'm expecting UJ to continue moving forward, upward, honestly. I do see this crazy ass bearish candle, this crazy FVG. I do see that too. I see all of that. But if I'm looking at the overall trend of the market, in my opinion, higher low, higher low, higher low. I'm still expecting the market to come and take out this high. That's my opinion. And most people say, well, it broke these higher lows right here. These all internal. This is the external low, external high, all these internals. The market can break all this shit. But if we respect this low right here, then I'm pretty sure we're going to continue creating higher highs and higher lows. But also,
I
if you actually took this trade here and you're up 200 something pips, that's a winner in itself. I think somebody was getting ready to say something.
No.
Was somebody getting ready to say something? Yeah. So if I'm looking, let's say we were looking to get in, find an entry on UJ, right? Because right now we kind of, again, I don't want to say we're really late to the party. I mean, we enter it now, yes, because market literally created a low, um, lower high, smaller higher low, higher high, and then this, right? Remember low, I would say low, high, higher, low, higher, high, whatever. This was nothing but like a little sweep of this. And then we traded back up, and now we end up creating a higher, higher than this high. So from there, I probably like a smaller trade, I would look for a pullback or a retracement back into this area for me to look for another opportunity to get in this trade and ride it all the way up. But I can literally take smaller trades within this, right? So if I was looking for this trade inside of this trade, I would still wait for market to give me this retracement, let these lower highs and these lower lows be created, right? Let this little move right here happen. And the moment market does one of these, I look for a retracement, boom, and I target that area. So now, even with this trade, I can literally do something like this inside of this big major move, right? Where I can go like a 50 pip stop loss, and I can go a 200 pip take profit, 250 pip take profit almost. So that's a trade I could potentially be looking for inside of that major trade. And this thing can continue to give all these small movements or moves until it goes all the way up to someone who's holding a position trade while I'm taking smaller trades inside of that trade. Does that make sense? Because literally, I could literally be getting in this trade before it even gets to this area and be out of this trade in case it does want to come up here and then come back down and then continue up. I'll be already out, catching small trades every time it creates a new higher low up into this area. So that's typically how I like to trade, get intraday, day type trades inside of a swing or position trade, if that makes sense. So once you understand the overall trend, you can literally trade within a major move by just waiting for market to give you higher lows. But if you wait for that retracement trend to be broken, because that's what liquidity happens. A lot of people say, well, how do you know when liquidity is gonna be taken out? Well, if it's an uptrend, buddy, and you know that a retracement is going to give you these little bitty moves, right? Because right here, liquidity is taken. But guess what? You ain't entering no buys yet. Market can literally continue with the liquidity and respect this right here. Right? Let's say market respects this right here. You still ain't in no buys yet. And then when market does this and then retraces here, then you get in the buys. We ain't trading or getting in liquidity. We waiting for it to happen. So when this low gets taken out and we trying to figure out what to do, we don't do nothing. We wait for market to break a lower high. We broke a lower high, we retested it, and we take it up. That's how you avoid getting swept by liquidity. That freaking retracement trend line. That's how you avoid it. All right. So, any questions, y'all? I done gave y'all too much sauce, and it's almost 11:30. I hope y'all really paid attention to that last part, because that's the bread and butter right there. Oh, wait, everybody asking about liquidity. If you draw that retracement trend line and you wait for market to break above that retracement trend line, you good to go then. Because we know how we do. We'll place our Fibonacci retracement from this low. Let's say we place it from this low to this high. Not even that low from that high, but let's say we place it from here to here. Or if we go all the way from there to here. Right? Look at it. We broke back above it, we retraced it, and boom. Market, y'all see market do this shit all the time. It'll come to our area, take us out of trade, and then start taking off because we got swept by liquidity. We didn't wait for the retracement trend line to get broken and continue to trade in the right direction. That's it. That's all that happens. That's how you get swept out by liquidity. All right. So I'm done talking. Any questions, y'all? So we can hop off this thing for the night. I'm gonna make sure I drop this recording too as soon as it finishes downloading. But any questions?
I'm good. Thanks, Zay.
Nasdaq, you killed it, bro. Appreciate it.
No problem.
Thanks,
Awesome.
A.
You're welcome. You're welcome.
Thanks,
Awesome.
A.
All right, perfect. So y'all, as soon as this thing finished downloading, I'm gonna send it to Mino because I'm pretty sure he might want to edit it. And then we'll drop it as soon as he finishes. You know what I'm saying? So give my boy some time, man. Y'all know he busy. All right. Well, guys, I appreciate each and every one of y'all for hopping on the call tonight. Make sure that you guys also join Heinz's call tomorrow. He will be going over fundamentals. I'm gonna be there for surely. Because we saw how news can really manipulate our charts last week. So just make sure that you're up there, you're learning, ready to take notes, ready to understand fundamentals, because we're starting to see how very important that shit is now. And guys, take advantage of everybody's call. Again, I appreciate y'all. Thank y'all for hopping on. Isaiah, do not forget to message me if you're still up here, so we can do that one-on-one, brother. I appreciate y'all. Y'all have a great night.
Yeah, Zay, thank you so much.
You're welcome.